It's no longer a question of if, it is rather a question of when the Federal Reserve will raise interest rates. The question of when maybe became a little bit clearer because yesterday Cleveland Fed President Loretta Mester told the Wall Street Journal that, and listen to this wording specifically, quote, "I want a June rate hike to be a viable option." That was the sentiment she shared. But what is the sentiment among other Fed leaders? In a Fox Business exclusive, we're about to hear from one more Fed president right here, only on Fox Business. Peter Barnes, standing by live in Philadelphia with the Philly Fed president, Charles Plosser. Hi, Peter.
Well, hey, Liz, that's right. And Charlie Plosser retires as the head of the Philadelphia Federal Reserve at the end of this month. And he gave his last speech today, and he's giving his last interview today to us here at Fox Business. And President Plosser, thanks again for joining us.
It's great to be here, Peter. Thanks for coming.
Before we get to interest rates and the path forward, you had plenty of topics to talk about in your speech today, but you chose to talk about the independence of the Fed. Right. Why did you choose that topic? Do you feel that the Fed's independence is threatened?
Well, through the years, the Fed independence has often been threatened to one degree or another. But I have a feeling that in listening to many of the conversations around the country today about the Fed, I'm not sure people really understand and appreciate how the Fed's structured, why its independence is so important.
But we have legislation on the Hill. Senator Paul audit the Fed legislation that has gotten 30 co-sponsors in the Senate. Do you feel that the Fed's independence is in more jeopardy today than ever before?
Well, I think it's clear to me. I can't weigh the political chances of this, but I do think it's pretty clear that people don't quite understand what that bill is about and why it does jeopardize independence. And I think it's important that the public understand better about our institution.
Okay, explain.
Well, I mean, the problem with the Audit the Fed bill fundamentally is it's not about financial audits. The Fed is audited by lots of people, lots of ways, different ways. This is about policy audits. This is about the ability of Congress to question an individual policy decision the day after the decision's made. And what that does is change the dynamic and change the nature of the conversation with the FOMC. It's an opportunity for politics to enter into the debate about policy. And I think debate's fine, but don't put at risk the decision-making process. Keep the debates on the outside.
So you're worried that politicians could, for example, keep the Fed from raising or lowering short-term interest rates because of political intimidation?
Exactly. Well, intimidation may be too strong a word, yeah. but certainly have the ability to sort of say, all right, we're going to audit this. We don't like this decision, so we're going to audit you. If that happens in real time, imagine the nature of the conversation within the FOMC room saying, well, are we going to be audited for this decision or not? It just changes the dynamic.
Could have a chilling effect.
It could have a very chilling effect.
Let's talk about the interest rates. And right on time, our friend John Hilsenrath at the Wall Street Journal has this article, Fed chorus grows louder on potential June rate hike. We heard your colleague Loretta Mester of the Cleveland Fed say this as well yesterday. What are your thoughts, even though you're leaving the Fed at the end of the month, what are your thoughts on the timing of the rate increase? And then about the path of rate increases, more important.
Well, I think the path is more important. So I don't believe we should be focusing on dates. We should be data dependent, not date dependent on liftoff and any other thing that we do. So I've tried to avoid talking about timing. I think the real issue we ought to ask ourselves is, what is the economy telling us about rate increases, and what is the path of the economy like to tell us about the path of rate increases? The focusing on liftoff is, I think, just kind of a unimportant kind of event that we need to talk more about what the path and how the data will determine that path.
Okay, so let's talk. Look, you have the floor. I mean, so how do you think that rates, how fast or slowly do you think that the Fed should increase rates once it makes the initial?
Well, I don't
increase?
think once is the question. Once it makes the question. The question is, I would rather see us start sooner rather than delay, because what is likely to happen is the economy continues to improve. Then if we delay too long, we may be faced with a situation of raising rates much more rapidly because the data are going to tell us to. So I would rather us get started, raise rates in response to the data. If the data come out unusually good, we may have to raise rates faster. If it comes out weak and we have a shock of some kind, we can slow down and stop. That's the way we need to think about policy. You've heard me talk a lot about reactions functions over the years. We need to talk more about how we're going to raise the path rates will take given the path of the economy.
So this is going to be different from the Greenspan era, where we saw, in theory, as soon as the economy started to recover, you saw the Fed raising rates 25 basis points, 0.25%, pretty much every meeting. Right. It could do that again, but are you saying let's make the first increase and then wait and see and then just take our time?
I think it could proceed along such a path. I don't think we want to make a commitment to such a path, but what we should do is say we need to start raising rates. We're still at near zero. This is crisis monetary policy. The economy is not in a crisis anymore, and we need to begin to raise the rates. And I think if we start sooner, we'll be able to do it more gradually.
But based on the data, you would have raised the rates yesterday.
Yeah, probably.
But since now, Fed Chair Yellen has said we are going to be patient about this, and patience means a couple of meetings. And since we saw the patience language in the January decision, March would be probably the first time that would be the opportunity to change that word patient, drop that. And then that would be a couple more meetings. That gets you to June. So
exactly.
Is June sound... I know this drives you crazy, but does June sound...
It does drive me crazy.
And you only have to hear me ask it one more time.
No, I think I didn't want patience in the statement in December, which is why I dissented against that. I think we need to leave open our options because we need to react to the economy. And if the economy grows much faster, continues to grow as it has, June may be, in some sense, too late. We may have wished we could be able to get started, but we rule that off the table. And that, to me, is not the best way to conduct policy.
All right, well, hold that thought, because we're going to continue our conversation, Liz, and we're going to talk to President Plosser for another 5 to 7 minutes, and we're going to post that portion of our interview on our website a little bit later today. That'll be exclusive. And before we go, President Plosser, thank you for joining us so many times on Fox Business to talk about this very important subject, the Fed and policy, and have a great retirement.
Thank you very much, Peter.
You bet. Liz?
Peter, I think the headline there is that pretty much he admitted that probably we should have started raising rates yesterday. Am I correct? I mean, this is a big headline.
Yeah, absolutely, and he's been frustrated by this, but he hasn't been able to sway his colleagues at the Fed, and given that he's leaving in a couple of weeks to hopefully head south to a nice beach somewhere in Florida, he'll have to do it from the outside going forward. Well, New York, Wall Street Journal op-ed page.
Yeah, he and Richard Fisher can do it together, because Richard Fisher feels the same way, and now I guess Loretta Mester too, so that's 3 out of them. Thank you so much. Go on foxbusiness.com, because Peter's actually going to continue that conversation live streaming.